The restaurant group has suspended its dividend as it announced plans to ramp up Frankie and Benny's and Chiquito site closures to focus on Asian fusion chain Wagamama. The figures read more. The restaurant group shares fall as Wagamama reports slowing growth. Restaurant group's share dipped 3.12% this morning as it announced it will scrap its dividend to focus on a new strategic plan. The company said this morning that group like-for-like sales were up 2.7% last year, with total sales up 56.4% to £1.07 billion. It reported statutory losses before tax of £37.3 million, compared to £13.9 million the previous year. It said adjusted profit before tax was £74.5 million, up from £53.2 million the previous year. The company took an £111.8 million hit during the year related to impairment in its leisure business, which includes the Frankie and Benny's and Chiquito brands. Adjusted earnings per share were 11.9p, while statutory loss per share was 8.2p. The firm reported operating cash flow of £140.5 million during the year, compared to £88.2 million in 2018. Why it's interesting. The restaurant group this morning said it will accelerate the rationalisation of its leisure estate from 350 sites to a target of 260 to 275 sites by the end of 2021. Last year the company reduced its overall estate size by 18 sites via closures and conversions to Wagamama. Read more. Wagamama owner restaurant group swings to a loss on £115 million. Write down. The company said over the next 2 years it will continue to grow its Wagamama, concessions and pubs division. What the restaurant group said. Chief Executive Andy Hornby said, "Having joined the business in August last year, I am particularly pleased with the continued and significant progress made following the acquisition of Wagamama and the integration of the business into the group, which has transformed the group's growth trajectory and momentum. Our 3 growth businesses of Wagamama, concessions and pubs are all outperforming their respective markets and have clear potential for further growth. I am also acutely aware of the challenges facing our leisure business and the wider casual dining sector. It is therefore clear that our strategic priorities need to evolve in order to maximize shareholder value in the medium term." For more on this story, visit the news article link.